Hi guys, this is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm going to show you how you can use a smart money concepts trading strategy to literally trade whatever you want. And in this video, I want to show you some examples for Bitcoin because this is literally the same thing. There's no difference. A smart money concepts trading strategy is the same for every single pair. So you just need to understand the concept, and then after that, you can literally trade whatever you want. So because the reason I'm shooting this video because I noticed a very good setup yesterday that happened on Bitcoin when the market was closed. Because I know this is 24/7 and I want to share it with you guys. So I'm not on a replay mode. I'm going to remove everything and then I'm going to do a little bit of replay to show you exactly what happened yesterday. So as you can see, we had a huge drop towards downside on a 5-minute time frame Bitcoin. So let's say that you're scalping the market, because I'm personally a scalper. It works on every single time frame because since I want to be in and out of the market in 20-30 minutes, then I do scalping. I never do swing trading. I used to do it for 2 years. It wasn't profitable for me, so I switched it to scalping. So we had a huge break of a structure right here and right here. So we know that the market is bearish just because of these huge breakout structures that we had. Okay, so the next thing we need to notice is the liquidity grab. So it means that where the market is trying to go to grab all the liquidity, whether they are buyers or sellers, whatever liquidity that they have. So this is the first one, which is already grabbed. So it means all these buyers around this area have been stopped out, because the reason is that if you see this momentum and take your buy position here and you want to leave a runner and put your stop loss here, this is already grabbed, and this is called liquidity. And that's how banks and institutions notice it, and they actually try to stop you out all the time. And this is exactly what happened. The second one is already taken, and let's see the third one is already taken or not. No, so far so good. So yeah, this one is already taken too. We had a bullish engulfing candle after that, and then this is a liquidity grab. So what I personally notice here is that when we have these wicks here below this level, so it means that the market, the price, try to grab all the liquidity around this area to stop out the buyers and then change the direction of the market. And this is what's happening. So because we have this bullish engulfing candle, we have this liquidity grab here, and now probably the market is trying to create higher highs and higher lows. See, it's trying to create higher highs and higher lows. So it means that it's already done its job, and now it's time to change the direction of the market and then to go towards this level to stop out these sellers here and fill in the gaps around this area. Because when you have a huge drop towards upside or downside, the market leaves a little bit of gap in between, and you just need to go towards this level to fill in and then you can actually take your trade according to the trend. So in this case, what you can do is two things. The first thing is using your Fibonacci level, which is going to be from here, because after that we have this and then a little correction, and now it drew up significantly. And then as you can see, it respected this golden zone. See, it respected this golden zone, and a lot of people, what they do is that they take their sell position here and they close it somewhere around here, and it's not wrong because we have a bearish trend, we have a break of a structure, we have a really good momentum, but you need to wait for the candle after that. So you see that it's not a bearish candle. If it was, then you could take your trade and then put your TP here, your stop loss here, and you could take a 1-to-2, 1-to-1 risk reward ratio. But right now the market is really choppy, and it literally break out of this golden zone, and now it's trying to create more higher highs and higher lows. So in this case, you need to change your bias. You're gonna be like that, you know, we have this Fibonacci level here, it didn't get respected, it broke the golden zone level, which is between 50% 60% level, and now if I notice, I see that it's creating higher highs and higher lows. So what's going to happen exactly after that? It's very easy, guys, because if you pay close attention, you'll notice that we have a high probability order block from here to here. And why is it a high probability order block? So by the way, if you don't know what order block is, I highly recommend you to check out my other videos or my first video on my channel that I truly talk about order blocks, you know, smart money concepts, trading strategy, and this kind of stuff, so you can understand how they are and how they work, actually what they are and how they work. So it's very important. I personally use them all the time. I have a live trading session every single day, and I literally use them every time. So if you want to do the same thing, I highly recommend you to check it out. So this is a very good momentum because of this high probability order block, because the reason is that this is for a bullish trend. This is the last red candle, and if I want to draw it from the top all the way to the bottom where we have this wick here, you'll see that we had a huge spike towards upside, and then the candle after that never tapped into this zone. So because of this space from this candle and this zone, because of this little space, it makes this zone a high probability order block. And what happens is that you just need to wait for the price to tap into this zone and see what kind of momentum it gives you. Then you can take your trade. So this is a really good momentum here, guys. This is a really good momentum for a buy position, because we have a, this candle is a really good indicator. We had a huge rejection towards upside, so it means that the buyers are trying to get into the game. And what's going to happen is, so you need to put your stop loss here below the zone. Okay, it's risky to put it below the candle, you can do that, but this zone is still respected and you need to put your stop loss here. Okay, but sometimes I do it under the candle, but it's kind of riskier. But as you can see, so if I wanted to put it under the candle, I would have get stopped out. But if I put it here, see what happens. Boom, done. That's what I'm saying, because of this high probability order block, which is super powerful. This is the first example. So if you see this momentum and you want to get in, you can put your stop loss here, and then you can take your TP somewhere around here, which is exactly one-to-one risk reward trade. It's a clean setup, and if you want, you can leave a runner for the second trade. So what you can do is that you can take two trades. The first one you close it after one-to-one risk reward ratio, and the second one you leave a runner. But you got to keep in mind that after when your first TP is smashed, then you need to move your stop loss to break even for the second trade. Okay, so the second trade has to be a break even trade, like a risk free, not break even, a risk free trade. So this is what I personally do. Sometimes I just leave a one-to-one trade and I'm done for the day. It depends. So this is the first one, this high probability order block, because of this gap. If you pay close attention one more time, you'll see another setup for high probability order block, which is this red candle here, and then after that we had a huge spike towards upside. So if I want to draw my zone from the top all the way to the bottom, you see we still have a gap. So where is the gap? Here. So this is it. We had a huge spike towards upside. The next candle never tapped into this zone. Even if it's a little bit, it still does count, and it makes it a high probability order block. So just because this candle never tapped into this zone, it makes this zone a high probability order block, and we just need to wait for the candle to tap into this zone. So as you can see, it already tapped into this zone. We had a huge rejection towards upside. We had a bullish engulfing candle, but in this case, you got to be careful. What you can do is that you can, take your trade here and then put your stop loss here, and then you can, leave a runner all the way to, I don't know, one-to-one, let's say. Or you can manually enter the trade right above this bullish engulfing candle manually. So you can put your buy stop if you want, or you can just wait for the next candle to see if it closes above the previous candle, then you can enter your trade. Or after seeing this momentum and after seeing this rejection towards upside, then you can enter a trade and put your stop loss here and your TP right here. So what's going to happen right now, you see that we have, so if you wanted to put your stop loss right here, again, you would have get stopped out. But this huge candle, which is a beautiful one, got rejected towards upside, and it's a very green candle. It's a hammer candle, reverse hammer candle, which is a really good indicator for buying the market. This is exactly what happened here. See, this is exactly what happened here. The same thing got duplicated here, which is absolutely crazy. I just noticed it this morning, that what happened last night. So you could take your trade right here, again, put your stop loss here. Now you can, close a one-to-one trade, and you can leave a runner for the second one if you want to, like all the way to here. But let's see what happens. Boom, one-to-one trade. Beautiful setup. It's easy, it's not difficult. You just need to find high probability setups, and then with a really proper risk management, you can enter your trade, whether it's a buy position or a sell position. Then you enter your trade, which is absolutely crazy, just using one strategy without Fibonacci. I personally use Fibonacci levels, and order blocks and nothing else. I don't take liquidity grabs, I don't trade support and resistance levels, I don't do that. Only support, only order block strategy and Fibonacci retracement levels. And as you can see, so after that it just went up and it went up. If I wanted to leave a runner, I probably would have got it stopped out, because if I wanted to, you know, move my stop loss to break even, it would have got it stopped out. And keep in mind, each order block can only be used once. So when I see that this is already tapped into, I need to take my trade here and put my stop loss here and just leave it. Okay, so I don't have to, like, I shouldn't wait for this one. Let's say that I took a one-to-one trade from here to here, and then I see that it tapped into this level one more time, and then I enter another trade. No, that's not valid anymore. Each high probability order block is only valid one time. After this is not valid anymore, and there's a high chance that you get stopped out. Probably not, probably you get stopped out. See, if you wanted to close your trade here, boom, it was already over. So that's what I'm saying. You got to be careful with all your you know, high probability order blocks. Each one of them is only valid one time. After it got tapped into, you gotta wait for a momentum and then you enter your trade. So before you go guys, let me show you one more thing which is going to be really interesting to you. It's about Goldie Incubator, that how much profit it made in the last 32 days almost, since January 21st all the way to February 25th, which is 22%. So we are up 0.21%, which is absolutely mind-blowing on a $10,000 account. So now we have $12,221. I'm gonna leave a link below in the description. Go check it out yourself. My FX book is absolutely crazy. And also, if I want to show you my VPS, you see that on Friday this robot literally took these trades here, and all of them, like most of them, probably 8 out of 10 were in profit. February 25th, and this is how it's actually went. So 2 losses here, but in overall we are up $1,757 in since February 1st, and in total it's almost 22%. So if you're someone who wants to trade you know, automated, you want to automate your trading strategy, this is a really good way to go for. So you don't have to get involved in the market yourself. You don't have to analyze the market. You don't have to keep watching fundamental news. You don't have to do any of that. You just simply install it on your MT4 account, and then the robot does, you know, its job during London session. It's absolutely mind-blowing. And if you want to grab your license, go check out smartincubator.com, and then you see Goldie Incubator here. Go check it out, grab your license, and then after that we'll manually send you the license, and then we'll activate it for you. And if you have any question, drop your comment here. I'll personally reach out to you. And again, thank you so much for watching this video, and see you later.